Greetings traders, Jason here with swinghigh.com. It is Wednesday, October 28th, 2009. It's about 12:10 in the afternoon and this is your halftime report. The markets are lower today mainly because of poor home sales data. They came out worse than expected. Let's just take a look here. The SPY, the S&P 500 tracking ETF, did open lower by a fraction of a percent. Filled the gap nicely this morning and then sold off. Right now we are making a low base, if you want to call it that, or we could make it a symmetrical triangle. So I do expect further downside from here, but I would not be surprised if we finished sideways, because most of the action normally takes place in the morning. But even if we finish sideways, today is a very, very bearish day, and I'll show you why as we get to it. Let's take a look at all the other markets. The NASDAQ showing relative weakness again. Didn't gap down as much per se, but we are down sharper than the S&P. By NASDAQ's down 1.2%. The S&P isn't quite down a percent, down 0.9% right now. The Dow is showing relative strength today. Not sure what's up with the Dow. I never really am. The Dow is price weighted and quirky, but what's more important is that the NASDAQ is relatively weak, as well as the Russells. Wow, down 1.75% on the Russells. Russells and the NASDAQ and the financials are all leading indexes, and oh my gosh. The XLF, the financial tracking ETF, is down 2% right now. So those being leading indexes gives plenty of room for downside from here. The VIX is up nicely at 5% over the 26 mark. The tick, very bearish all day. As you can see, this thin red line in here is my zero line, and we are under that for most of the day. The TRIN has been basing bearishly. It's been showing bearish sentiment all day because 1 is neutral on the TRIN, 1.2 above 1.2 is bearish. That indicates that more volume is flowing into stocks on the decline than on the rise, and under 0.8 is bullish for the opposite reason. Let's take a look at our big setup here. As you can see, this thick light blue line is a big rising wedge formation, and right now if we close where we are, we will have broken down out of that rising wedge. That is incredibly bearish. On top of the rising wedge, we do have this bearish divergence in the MACD. What I mean by that is, as you can see, the MACD is making lower swing highs while the market was making higher swing highs. That is a bearish divergence. That is a very strong indication that we are headed lower. Also keep an eye on volume. So far it looks sort of strong. Hopefully we can continue to see strong volume throughout the day. Let's look at the rest of the indexes here. The Dow is showing some relative strength, as I said before. I'm not going to pay too much attention to that. The XLF, the financial ETF, breaking down big time out of its rising wedge. As you can see, it actually broke out yesterday of this rising wedge formation, and now we are seeing continuation to the downside. The Russells, the small cap ETF, or the small cap tracking ETF, is also showing a similar pattern to the XLF, breaking down hard. Also, the Russells, being a leading index, has a double top, and the double top will be confirmed if we close a little bit lower than here. We have to close under our low of 57.53 on the IWM. And that'll be a confirmed double top, also a hugely bearish formation. The NASDAQ, really quick, spent a few seconds on here, is also showing relative weakness, breaking down out of this channel. I know I sound excited, and it's not because stocks are going down, it's because stocks are moving. I love seeing this definitive action. Thanks for being a part of swinghigh.com. Talk to you later.